Hi, everybody. So I was going to do a little bit of an introduction just so that you guys knew who I was. Obviously, I have a family team, and that is actually my whole family. So I work with both my sons that are licensed realtors, and my husband actually works with us as well. And then we have a full-time unlicensed assistant, and I have one other agent that is part-time and just more of a covering agent. So that has been the last couple of years. I was forced into that position because my boys joined real estate, so I didn't have any plans of creating a team. And then my husband retired and said, you know, and then I had things to do, so I was like, well, I don't think you should retire yet. I've got some things you could do, and then he's just worked into my team. So I'm going to talk a little bit about my story, but before I do, I will introduce the two ladies beside me. I'm super excited to have Alison Setton. She actually has an office here in Oakwyn. She's worked in the financial industry as a life and securities licensed agent for 13 years. She comes from a background of environmental engineering and got her MBA in 2003 from Queen's University. She's passionate about demystifying money and teaching people how money works. Which is what I've been working with and learning the last few years. And she works directly with clients to build and implement custom financial strategies, whether they are employees, self-employed, or business owners. So it covers everybody, and it doesn't matter at what stage you are in your finance. And this is along with her husband, who is a former realtor and developer, David Setton. They are growing their brokerage and have a dream to build 100 part-time and full-time licensed agents in the next 2 years, and in this way they can help more people and magnify the transformation impact that the financial literacy has on a family. So that is Alison. And then we have Kelsey Dunwoodie, yes, partner and portfolio manager at Dean's Knight Capital Management. They provide independent investment advice and to high net worth individuals and entrepreneurs. She started her career as a chartered accountant before moving to Dean's Knight, where she now spends time, and the majority of her time, focusing on building portfolios for their clients. While they work as a team investing in a variety of businesses, she's primarily responsible for our natural resource investments. Nice. So we have a difference of personal experience, a lot of personal finance, and a lot of business and investments sitting up here. And what I was hoping we would do is basically we're going to talk about your relationship with your money, my relationship with my money, and then personal and business. And I wanted to not have so much of a presentation, but more of an opportunity for everybody to ask questions, because I often find when you do something like this, you can have someone sitting in the room that has never done a budget in their life and wants to learn how to do that. And then you can also have someone sitting in the room that has got a lot of experience and might have a lot of money in their corporation and just doesn't know how to make their money work for them. So we are really relying on you guys to ask questions. Please throw it out there, because that's where we're going to get the most value, and you will probably get the most value if you ask questions that you really want to know. So, relationship with money, understanding relationship with money. I'm gonna pass this around. And these are a whole bunch of questions that you each can take home. Necessarily not, you can think about it while we're talking, but these are some real introspective questions that you can ask yourself to really figure out what your relationship is with money. Because believe it or not, we have one. Yep. So you either love it because you love talking about money and you want to talk about it at every moment of the day, because you're super excited about how it works and investing and all that kind of stuff. You either hate it, it's like, I don't know, I don't want to talk, okay, I guess I have to talk about money because money makes the world go round, but I really don't want to, and it's just not something that you want to talk about. Or you're the ostrich with the head in the sand and you just don't even want to discuss it at all. So when I talk about my story, so I've been married for 32 years to my husband, and when we first started, I was 22 years when we got married, and when I'm the ostrich. Like, I do not like talking about money. So I have changed quite a bit. My husband is the guy that loves money and loves talking about it every chance he gets, and often wants to talk to me early in the morning when I'm just starting my coffee, and I tell him
so romantic.
Yeah, it's like, no, give me an hour to wake up. I don't want to talk about it yet. But he's raring to go about it all the time. So we had a really interesting dynamic where I actually, when we were first married, I put a lot of responsibility on him to pay all the bills, to organize our money, make sure everything was set, and I wanted nothing to do with it. What I realized later on in life is I actually put myself in a position of being dependent for money, which was something that I learned was something that I really had to work on for myself, because I have since realized how important it is, especially for women, to have independent financial knowledge and have your own money. So what I have done over the years, and this was not his fault at all, I put it on him, and he just took it and ran because he loved to work on money. So what's happened over the last 32 years is I've had a shift in my mindset when it's come to money, and it's taken me a long time. And I'm saying a long time because just recently, over the last 5 years, it's been the major shift. But what I came to understand was how important, the financial independence is for everybody, whether it's male or female. And I had to take responsibility for my own business and my own finance, because we ended up, my business has grown in real estate to the fact that I was making some very good money, and I was being challenged through my coaching, because I do coaching with Richard Robbins. I was being challenged through my coaching of, what are your numbers? What are your expenses? What are your income? And challenging us in regards to thinking about our business as a business. I'm not just a realtor. You're not just a realtor. You are a business owner. So run your business like a business. So I ended up taking some responsibility. I've accepted my limitations and my gifts when it comes to my business, and my limitations are definitely around money. So I still to this day find it a very boring topic. So it was very ironic that I was asked to do this seminar. And my husband even said, when I told him I was coming down to do this, he says, you're doing this one? And I'm like, yeah, isn't that funny? He says, yeah. So I have, what I've done is I've surrounded myself with the experts that I need in order to make sure that I'm in the right spot when it comes to money within my business. And then really having a mind shift that we are running a business, all of us. Whether you're brand new, 6 months in the business, or you've been in the business for 20 years, we're all running a business. And as soon as we have that mindset, you're going to focus on making sure that you're doing that. And then making sure I know my numbers, right? So my husband now is the CFO of my company, which is his wheelhouse. And yet I still maintain control as the CEO. And this is something that's just recently happened for me, is we are going to start having monthly meetings about my finances and where the numbers are, where the expenses are, where the income's coming from, so that we can properly plan for the future, and business and personal. So that's kind of my story and where I have been and where I am today. And we've done lots of learning over the last 5 years, which we might talk about up here when people start asking some questions. But I want to now bring in Alison and Kelsey and at least start opening up for people to have questions. And I've got a couple of questions up on the screen, which we'll talk as long as, if anybody doesn't have questions, but just to start it off. When it comes, let's talk about personal finances first. Where does someone start? Someone they're brand new, it's financing, it's like, where the heck do I start with finances?
Yeah. Hello, there's a lot to unpack there.
I know.
It's amazing. I would say a really great starting point is partly what you've done here is thinking, number one, how do you think about money? And I would start by, and I think especially for women, it's not so much how do you think about money, it's what do you want to do? What is important to you? What are your goals? Because money means a lot of different things. It can mean security. It can mean independence. It can mean freedom of time. It can mean preparing my children to be able to have choices. So understanding what money can do for you can be an easier way to think about money than if I say, how do you think about money? I'm thinking about how do I earn it and how do I spend it, right? And there's a lot in between, but it's a very numbers-based, and it can be a kind of a turnoff. But I find for most people, thinking about what you want to do and what you want to have and your family to have and what you want to give, that's a good place to start. What are your values, right? What do you really, really value? Not what you're saying you value, right? And then aligning your actions with your values, right? That's, I think, where it's really important to start, because as an advisor, I'm here to help you get you to where you want to go. And we have amazing tools, right? Amazing tools out there, but if you don't know where you're going, like, how do you even start the engine, right? So that's where I would start, is what do you want? What's important to you? What are your values?
And that's a hard one for the ostrich in the sand.
Yeah.
I don't even want to talk about it, but so.
You think you don't, but
right.
I bet the way you live, you know, a lot of women, they're doing things for their family. So maybe I want my family to be able to do certain things. We all have desires and wants and dreams and goals. Start by not trying to relate it to money. If money is a turnoff, right? Get some help in having that conversation with a coach or an advisor, but first, tell them what you want. Like, I just want to be able to not have to get up on Monday morning and go into a corporate job that I hate. You know, that's saying I want freedom of time and I want flexibility of time, right? So, yeah, I think advisors and coaches are good at decoding what you say and what you do and how it relates to money. Yeah, let me give you a chance.
Yeah, I mean, like, I think just the values discussion is valuable, but I think you also have to do what you're not going to be comfortable with, which is just take out a sheet of paper and figure out, what do I own? What do I owe? Because if the owing is greater than the owning, or the spending is greater than the earning, then there's no point in talking about investing at this moment, because you have to fix that equation first. So, I mean, I think that has to come back to your values, but to begin with, you know, no business survives when the expenses are greater than the revenues, or when the liabilities are bigger than the assets. So that's I think, you know, the numbers side of where do you start?
So that's almost like a personal audit.
Yeah.
You're going to have a good audit of, okay, I just had a coffee at Starbucks. I just, like, every penny that you spent, because I've done that. I've done that exercise. It's not fun.
You don't have to do it forever, right?
No, but it is
you do need to do it.
A good exercise to find out exactly where you're spending money, because I'll guarantee you, which I was very shocked of where the money was spent and where I could adjust in order to make the spending less than the earning. But that's very hard to do, and that's what the ostrich doesn't want to do, you know, because then you're really having a good look at yourself of where you're spending your money.
And I mean, like, I think the easiest thing today is that everything is on a card, or people pay for things on their watch even, like, you don't even take out a card. So if the whole thing is making you nervous, like, I don't know where to start, then maybe just start with as simply as, like, I think I spend $400 in a day. That's my guesstimate of what I spend in any single day. Maybe I take my car payment out of that, because that's going to come out or whatever. So I'm going to take out $250 in cash and see if I can make it through the day with just that money, or make it through the week or whatever, and just see, do I have an actual sense on what I'm doing every single day, or am I just doing this tap all the time and I don't realize, or I go on Aritzia and it's like $700 later, right? Because it's so easy. So I think everything is first principles, is like, if I'm afraid to find out what I own or what I owe, then let's just start with like one day in my life, and how does that look?
If you're afraid to show an advisor your calendar and your credit card statement, you're probably living out of alignment with your values. I was afraid to show my husband my credit card statement at one point in time, right? Before I came into this industry. Before I came into this industry, I had like a separate credit card that was for the clothing, because like he did not understand what women's clothing costs, and I didn't want to have that conversation. That's not healthy. but I was there at one point in time. And then eventually we figured it out together. And I really think understanding money and using money as a catalyst for other conversations. I don't even know if we would still be married today. This was like 15 years ago if we hadn't addressed that. Yeah. Not that I had a problem with debt or anything, but it was just a disconnect. I should let you.
Calendar relates as well.
Yeah.
Would I be afraid to show you my calendar?
Yeah, so we all have these wonderful goals of what we're going to do. We're going to prospect, and then we're going to time block for that, and then we're going to meet with clients, and if what you do is completely different from what you intend to do, so I'm talking about your real calendar, where do you really spend your time? Then you're not being true to yourself. You're not keeping promises to yourself. And then that erodes your self-confidence, and that can express as, I'm going to go just blow some money at Aritzia and feel happy today, right? So how we spend our time and how we spend our money, and those two are really the same at the end of the day, are really indicators of what someone values, which is not necessarily bad. If you spent the whole day with your kids, it's like, great, you value your kids. Let's not pretend you're doing something else. Let's really focus on how to do more of that, right? Does that help? Yeah.
So please feel free to, I'll be watching the crowd. If you have a question, put up your hand. We'll definitely address that, because at any point we might say something that triggers a question for you. So please put your hand up at that time and we'll stop the conversation and ask the question, because that's where we're going to get the most value for you guys. So my second question was, do I understand my current financial situation? So what we've been talking about is more about understanding your personal current financial situation and really getting true and honest to yourself about where you're at. Because if you don't know where you're at, you can't figure out how to get to where you want to go.
Exactly.
Does it make sense?
Yep. And I think a lot of people need some help with that current financial situation. That's where, you come to the advisor knowing what you want. They're going to take you through that exercise and hold your hand in some cases through, what do you earn? I mean, some people don't know how much they earn. And it's kind of understandable these days, because a lot of gig workers, there's a lot of lumpy, especially being a realtor. It's like, well, last year I made this much. I have no idea what I'm going to earn this much. So there's techniques to be able to deal with incomes that are like that, as opposed to the old days where you kind of could predict what you're going to make. And then knowing exactly, as Chelsea, right? Kelsey, that's what I thought, said, knowing where your money goes can be, fear-inducing. It's very confronting for some people. But auditing where you've spent your money, and that's called cash flow, the difference between the two.
So you said something that triggered something for me. So in real estate, we all know that the real estate income and the motions of this business is a roller coaster. It's highs and lows. Yeah. What I personally did in order to take those highs and lows out of my life was I get a paycheck from my company every 2 weeks, like I am at a job, regardless of what I'm making in regards to the commissions.
Nice.
What are some techniques? Because you said there are techniques out there. What would would that be a technique, or do you have some other different examples in order to help with? Because the highs and lows are the hardest thing about this job. Like my husband hated it because he's such a numbers person, right? He's like, we can't budget. I have no idea what you're going to do next year. I'm like, okay, so how are we going to fix this?
Yeah. So I think number one, it depends on what phase you're at as a realtor. If you're just starting out, you're kind of in survival mode versus you have the ability to have built a cushion. But I think number one is having an emergency fund. But for a realtor, instead of 3 to 6 months, it should be more. Like you want to build up a cushion that's maybe 6 to 9 months or even more, because 3 months is kind of a normal dry spell, right? It could be 6 months or a year if you add on top of that, you're out of commission because you're working or you're hurt, that kind of thing. So having an emergency fund that you give yourself permission to use under certain circumstances. So you have rules around it. Not, okay, I need to go to Mexico because I've got SAD. Like that could be a rule, but I would say that your emergency fund is there to even out your income. And knowing your expenses, right, and knowing your needs versus your wants. As you get more established and maybe you have a corporation, you have money in a corporation, you can pay yourself an income is fantastic. But if you're just starting out, you might not be there yet.
I have a holiday fund too.
Yeah, exactly. You budget for
holiday
those.
Fund, emergency funds, pool funds.
Yeah.
And that's how we did it.
Nice, exactly. Alignment with your values.
Yes. Anything
Kelsey.
to add?
I mean, I think when you have a very variable income, not to be like the downer, you have to be really certain on what your expenses are. So I think there's a lot just in society as a whole of like being very focused on an image and what does that image cost versus what I should really be doing. And obviously you have to, you know, have nice presentation materials, have a marketing campaign, all those things, but you should be talking to your peers, talking to your mentors, and figuring out like what really is the best value for my marketing dollar, right? Like everybody's doing this, but is it actually the right return on investment for the type of projects that I'm selling? I think those kinds of things, like especially in the early days, I guess, if you're much tighter on what, you know, your income is or less certain on what your income is, then spend that time like honing your craft and really understanding where should I spend the money, what pays off in the end, right? I think everybody is really fortunate in a lot of ways that like there is less expectation now, I think, on having a lot of high fixed costs. So, you know, a lot of people are totally open-minded to meeting at places like coffee shops or restaurants, and so you don't necessarily need right away to commit to a rental space or something in your business, which wasn't there, or if you're going to go into the restaurant business is not a reality. So, you know, when your business is your own blood, sweat, and tears, while that can be very scary, it also allows you to have a lot of flexibility on the cost side initially. So I think take that while you can, because like anything, when you commit to something too expensive, whether it's a house or a car loan or something, then those are the things that come knocking when you don't have income.
How often should we be assessing our expenses versus revenue? Because, for example, I just started doing quarterly bookkeeping, and if I look at my bank account, I think I'm flush, but then I look at my quarterly statements, and I'm actually having a loss. And so, how often should we be adjusting our goals based on these statements or these assessments of our business?
I mean, that's a great question. I think if it's early days, I would say more often than not, but I think there's also this lesson that someone taught me, because I invest in the stock market, and you know, he said, my dad was a doctor. If you took your temperature every minute, you'd think you were dying. Like, you have to pace yourself, like, because if you're going to look at your cash flow every day, it's going to go like this every day. You know, you need it to go like this over time. So it's a balance. But I would say at a minimum, I would go monthly to start, just because most things you pay monthly, right? And
Any other questions?
Is there a percentage that you would consider like being successful? Like if you've got so much expenses and you've got a profit of X percentage that shows like, hey, you've got a healthy, steady business. I don't know, maybe more answers you can.
So through the Richard Robbins coaching, Rich tells us a percentage, and I'm trying to remember that bloody number. I think it's 30% of a profit loss, or net profit. I think it's 30%. I can get that number for sure and let everybody know. But I have, when we get to the business section of it, I've got spreadsheets that you guys will get QR codes to use, and it's Richard's spreadsheet that he has us do with our business, and you can plunk in all your numbers, and then it gives you a net profit percentage at the bottom. So I have that tool at the end of the seminar I'll give you guys, but that was a good way for us to figure out, okay, doing that audit, it was more of a business audit, and making sure that we are knowing exactly where all of our dollars are going, our marketing dollars, staffing dollars, all that kind of stuff. And then it shoots out that percentage at the end. And I think it's around 30%. What did you guys?
I think it really depends on, so you have, say you have that profit. Now, what are you doing with it? And have you included saving for your future, like the long-term investments? Have you included that? Because I think the easiest thing to ditch when the mortgage comes knocking is life insurance, critical illness insurance, disability insurance, long-term savings, because they're not urgent, but they're very important. And so we can get the profit. That may or may not be money you're just going to go spend, and maybe money that you're like, okay, I'm investing this into my freedom of time fund or whatever your funds are. So it just depends, I think, on whether, I'm not sure if his spreadsheet.
No, we'll revisit that when I show you the spreadsheet, because when like my income that I take out of my company is in my expenses as staffing income.
Yeah.
So when I see my true profit at the bottom, it's true profit that I can then turn around and decide, okay, where are we going to reinvest that, whether it's in, you know, stocks and bonds and all that kind of stuff, or whether it's back into the whole life policies that I'm working with. So that's, you know, but I think the goal is to get it at about 30%, and then once you know your true numbers, it's like, okay, how can I adjust that, either up or down? Usually most people want it to go up, not down.
And it depends on personality as well. My husband is here, and I can say, like, at the beginning, because he has a security mindset, that I had to make him feel kind of poor for him to like keep the fire on, right? Like, and you just got to know yourself. Like, so I would take the money out of his account, invest it at Mercy's Fund, that kind of thing. And then he was like, oh my goodness, like, I need to go sell another house, right? But we had the money, but just seeing it made him feel like, oh, I can just relax for a little while. Take the foot off the pedal, you know? So you got to know yourself.
I'm like your husband. My husband takes the money out of the account too fast too.
I know. And know your partner.
It's like, where did all that money go? He says it's in an investment.
Exactly. Can't touch.
Glad you did that though.
Yeah.
Changed my life.
Yeah. And true, I can say that too. It really does help when you and that's again surrounding yourself with people that experts that can protect you from yourself sometimes as well.
Yep. He helped me learn how to earn more. I helped him how to keep it. So it's different skill sets in a way. Yeah.
Yeah, absolutely. I put up here shared, blended, and individual finances. So the reason I put this question up here, because originally this was just set for women only. And then I was talking to Arlene, and she's like, do you care if men come? I'm like, no, I don't care if men want to come. It's not a big deal. We're not talking anything secretive. But this was more about, I've seen a different trend. So when I got married 32 years ago, it was all blended. We were instantly had a dual credit, a checking account, a savings account, like everything was blended. Everything was together, and I didn't have my own finances, didn't have my own bank account, nothing. It just didn't happen years ago. And I do know now, I have daughter-in-laws now, and I know that they have their own accounts, and they have they have a shared account for house expenses and all that kind of stuff. So I wanted to bring this up and talk about maybe the difference between, you know, is it good to be shared? Or pros and cons of shared, pros and cons of blended, because you can have a combination, or I've heard of some people just have everything independent and they split everything down the middle. So I don't know what the trend is out there right now, but maybe we can talk about that factor and when it comes to personal finances.
Totally.
Not business. We're not into business yet.
Well, I can say a few things, I guess. So how I have always done it with my partner is we have whatever we're going to spend for the household. So, you know, your mortgage, your child care, whatever else. And we used to always we have a joint account. We both put our amount into the joint account, and we had our other stuff separate. And we both have different businesses and whatever, and so sort of your own personal, private stuff going on. But everything was all there, and it was just kind of a practicality thing, and then over time that changes. I think at the end of the day, if you're really in a committed relationship, everything will be 50-50, no matter what you think. In the end, if you thought you had things that were secure, like the longer you're with someone, it's just going to be 50-50. So you better make it your business to know what you own, your partner owns, and what they owe or what they may not owe. Yeah. And so I think it's best to establish an openness. That doesn't necessarily mean you have to have a blended relationship in the bank account, but you should openly know what everything is. And then if it's like, hey, Kim has $2,000 a month, I don't know what she does with it because I trust her with it, whatever, but that at least I know that at the end of the day, that's how much she's spending a month. And then who cares what you spend it on? You go invest it, you blow it on clothes, you go out for a nice dinner, but that's your money, but your partner is aware that that's your money, right? And I think that it's the awareness piece more than like how are we actually dividing up the pie piece that's probably important.
Yeah.
That said, one time a long time ago on Oprah, I heard this guy who was talking about domestic abuse, and I think this is always the best thing for a woman especially, is you should always have one bank account that your husband or your partner doesn't know about, that you have 2 months worth of living expenses. Because no matter what, no one can access that money but you. And I've always done that. So back in the day, Tangerine, which I think is now like Scotiabank or something, I just had money there. That's it.
That's a good tip.
I never touch it, I never think about it. It's not a vacation fund, it's nothing. Have it in an interest savings. If you can get to the point where you have that, you should always have it, because you just never know what might happen. And hopefully it's nothing terrible, but because that's when you get into trouble, is when everything is shared and you can't do anything when you have an emergency on your own.
Yeah. Well, I agree with everything Kelsey said, and I was going to say the exact same thing. It's about being engaged and aware. What I don't want to see is one partner, and it's not necessarily gender, but there are some trends, but where one partner is like, oh, my spouse does all of that. I see that way too much. Especially women, 90% of women are going to be the sole financial decision maker of their family at some point in our life. We live longer. We still earn less, over the balance of our life, which contributes to less government benefits. And so we do need to be aware that we're going to have to take care of ourselves, either in an emergency situation or just demographics. So being engaged and aware and not abdicating responsibility to your partner for any part of your finances, be it budgeting, be it investing, is really important. And then I think it's very personal how you and your partner split things up. I've been in a relationship where we tracked everything and it was 50-50 and it worked for that relationship. My husband and I now, it's just one big pot. And the last thing I'll say is shared 50-50 is not always equal. No, equal is not always fair, right? So I have a need to spend money, a bit more money on myself than my husband. He's super frugal. I would be miserable if I only ever bought one shirt at Costco a year. Like it's just, he's totally happy, right? He's like, he's a minimalist. So it doesn't mean that everything is split 50-50. You have to, again, recognize your values, take care of your shared goals, take care of your shared expenses and fixed expenses, and then you divvy up the pot, but it's not necessarily 50-50. Yeah.
That's great. Any questions?
I think a lot of women, to Alison's point, specifically kind of defer from investing. So Kelsey, in your opinion, what do you think are some of those, and they'll often say like, oh, my husband handles all the investments, I don't need to be interested in that or engage in it or learn about it. What is sometimes your answer to that, or that kind of mindset?
I don't have an answer per se, but I somehow think it comes down to like competitiveness. I don't know why. I'm not a psychologist, but like I watch my son and my daughter. I watch my husband, his friends, men I work with, women I work with. And I think like from a very early age, there's just more competitiveness in boys and more opportunity for failure. So if you're investing, I mean, even if you have a professional, you will make mistakes.
Yeah.
And women through like growing up, mistakes weren't as valued as they were for boys, which is why I just think, I know I'm gender basing here, but I think sports, I think that kind of need for competitiveness, whatever, they learn earlier on not to be afraid of looking stupid, to try things, to take risks. And I think that's why generally women don't talk about it or avoid it, because it is taking a risk if you're not extremely comfortable with it.
Yep.
I don't know what to tell you other than that if you're gonna do it, there's always risk involved. Like anytime your money isn't in cash, there's risk involved. But you just have to take calculated risk. And if you don't talk about it, you can never learn. So you have to start somewhere. And women actually do know how to invest, but you just have to take it back to sort of those first principles of anything you do in your daily life. So for you guys, it's real estate. So you know real estate really well. How do I look at a property? How do I think about just how to sell this property? It's the same thing about investing. It's just a different asset class.
And it's exactly what Kelsey said is very, very true, and maybe build on that a little bit, is sometimes reframing. Like men will gamify earning and stocks. Like you can hear in the locker, oh, I invested in this stock and that stock, it's done so well. But men have issues too, because they have so much ego sometimes around investing that they can find it harder to reach out to get help, right? The advantage that women have, and again, I know we're gender biased here, but is that women are, it is kind of reality. Yeah. Women are willing to say, I need some help here. Yeah. And to Kelsey's point, like women are actually better savers, less practiced at investing. And I think it really is a language. So if you can start thinking of investing as a language, right, you can learn a language. It's uncomfortable. You're going to have to make mistakes. You're going to have to take some personal risks. But you can get help, and you can put yourself in the conversation with other people that are talking about it and get more comfortable and start to be more fluent. And I think that reframes risk as well.
That's a really good analogy.
Yeah. That's where I struggle.
Right.
I would struggle sitting at a table and not understanding the language.
Yeah.
And feeling stupid and not feeling like I can contribute to the conversation.
Yeah.
So I'm just going to put my head in the sand over here, and you guys talk about finances, and I'll go do something else. More fun.
Totally. And if I can give a plug, tomorrow, Wednesday, 4 o'clock and 7 o'clock on Zoom, I'm giving a presentation on the language of investing. It's free. Everyone's welcome to come. Let me know if you want the link. Yeah, everyone, it's open to everyone. Yeah. Okay. My little plug. Come learn.
So this is an example of the spreadsheet that is in, you guys are going to get the QR code, so don't worry about that. It is a workable spreadsheet. You're going to be able to download it onto your own computer. Don't play with it within the drive, because it'll show everybody, so just download it and use it.
Make a copy.
Make a copy and put it in your own computer.
Good advice.
And this is just for personal finance. So this is just for you within your family.
Amazing.
For you guys to do this. So let's move on to business finances, because they are very different. Because within business finances, you're running your business, whether you're a realtor for 6 months or whether you've been a realtor for 16 years. Then you've got your business finances, and in your business finances is the finances you're going to take out and deal with all this personal finance on.
Yep.
So when we talk about business finances, one of the questions I put up here is my business financially sustainable and profitable? So I think this was just to comment and spark the conversation about maybe a business audit, to make sure that you really know where you're at in regards to your own numbers. And am I effectively managing and optimizing my cash flow? And we've kind of talked about these points through the personal aspect. Does anybody have any specific questions when it comes to business because personal finance and business finance kind of overlap a lot. Like there's a lot of things that you can do in both that will help you in both.
I'll kick off the discussion.
Sure.
Maybe. I think it's also useful. A lot of times people think a business I don't have a business until I'm incorporated and I have a prec. But you can start to have a business mindset when you're self-employed by thinking about how can I remove myself from the equation of what I'm doing. If you're doing, and at first of course it's inevitable, but if you've been in the business 10, 15 years and you're still running around doing everything yourself and you can't go on holiday, like is that really what you want, right? So if you can start, and especially for women, we want to take it all on, want to do it ourselves, I'm a total control freak. So can you get an assistant? That takes risk. It's a bit of a leap of faith, right? If you've got your emergency fund, you're set up. Can you outsource tasks? Like, I think one of the first things Michael told David was write a list of all the things you don't need to be the one doing, right? And be really honest. So you're thinking like a business. So then when you incorporate, you've already got some systems and you want to get to the point where systems run your business that you don't have to run your business. So it doesn't mean you're incorporated yet, but you can think about that even when you're self-employed. So maybe that sparks some discussion.
Absolutely. Anything to add on that?
I have something, it's probably not, I don't know anything about your business in terms of I'm not a real estate agent, but my view would be not everybody is supposed to be a business owner. And and if you're earlier in your career, this is the time you need to look yourself in the eye and say, am I a business owner? Because you're taking on a lot of extra responsibility that an employee doesn't have. So you need to make an investment at the beginning, absolutely. But you have to have a timeline where you're like, if I'm not making this amount of money by this time, I am not a business owner. I am maintaining a salary with a lot of extra stress, no security blanket, and maybe some flexibility. And I think you have to be very honest about that, because you should be making a salary plus that profit that you're talking about for it to be worth all your time to deal with being incorporated, the risk that you're taking on, the assistant that you have. Otherwise, maybe you should just go be someone else's assistant if you like real estate and you'd like to just make a cash flow and you're not doing that good. And it's okay to say that to yourself. But going back to the values, I think you really have to think about that in a job like this, right? Because if you're doing all this work and you're making, I don't know, pick a number out of the air. Let's just use 100,000. I think all of you probably have skills and experience and a network that you could probably go get a salaried job from somewhere between 90 and 110,000 that, is going to be essentially the same as, or maybe even better in your take-home pay than what you're doing right now. So I think that is part of what you have to look at when you look at a business. And it is absolutely okay to say I'm not a business owner. Not everybody is, because it's really hard. And if you are, then I think that's how you set it up. You say, I want to make 700 grand a year. This is how many listings I have to do. This is how I'm going to do it. This is who I'm going to hire. This is what I'm going to spend on things. Because like any other person in business needs to have a plan to go out to get that business funded to be successful. So treat yourself the exact same way. If I had to sit down in front of an investor, tell them why they're going to be in this business, the investor's me, or the investor's my partner, or the investor's my parents, or my kids in Kim's case, then I got to show them. Why am I any better at this than the next person?
I have a question for
Yes.
you. Said that you pay payroll, and at the end of the probably annually, you would recognize that this is a profit or like loss or anything. If you have profit, I want to know how you take it out from your business account. I want to know, like tax-wise, how you do it in the best way.
Now I do it very different than what I used to. And this
I
is
need your experience.
right. So this is something that I am currently learning about, and I think, Alison, I will try to explain what I have learned so far, because again, I'm still learning the language, folks. Bear in mind. So we've been recently working for the last 3 or 4 years, been working with someone that is guiding us with the amount of money I had in my corporation and how to invest that money. And we use a dividend sharing whole life policy, correct?
A PAR whole life policy, yep, dividend paying, yep.
Okay, perfect.
Yep.
Good, I'm getting the language
Yeah,
right.
right on.
Just so you know, it's ongoing education. So that's the vehicle that we've decided to use that is within my corporation, that is giving us the tax benefits that I can invest and move things over to this life policy, whole life policy, and not have to pay as much income tax. It is enabling us to do that and then borrow against the policy in order to then turn around and invest in something outside of the policy if I so choose. And it's done with a holding company and all that kind of stuff. It's very confusing. I have been doing this for 4 years, and I'm just now starting to click on, oh, now I get what that means. And that has taken us through a very good roller coaster ride of, and even my husband. So even my husband has found it very confusing, and he is very knowledgeable in finances, but he said just recently, he says, you know what, I'm having to unlearn all the stuff that I've learned. It's such a different way of handling our money that it's a real challenge. So he's done a lot of video and book reading and all that kind of stuff in order to understand the concept And then we're just slowly going through that. So it's something that I would advise getting professional advice on. There's companies here in town that do it. I'm working with someone out of Ontario just because I was connected through my coach. And then, there's a whole bunch of different companies that can help you figure that out. So if you have money in your corporation, there's definitely ways to get your money working for you better than it just sitting in the bank account and earning, what is it now, 2% in the bank? Which makes no sense.
So I'll step back just a little bit. I wish you were my client, but I just kidding. So Kim is talking about a very specific strategy. I would say if you think about your corporation and you've incorporated and now you're earning money, and what's happening is you're keeping money inside the corporation, right? It's called retained earnings. And you're taking out what you need to live for personal income. So the strategies around personal income are going to be different than what you do inside your corporation, but the challenges are always around tax, right? You can have money in your corporation that's sitting at a low corporate tax rate, which is great. But when you take money across that corporate personal barrier, you pay tax, you pay income tax. So first of all, I would advise getting some of your big purchases, personal purchases done before you incorporate. Like, don't build up $2 million in your prec and then you want to buy a house personally, because guess what? You got to get it out, right? So you want to have enough money outside and then you start to build retained earnings inside your prec or your holdco, your corporation. And then you got to figure out, what do I do to get this money working for me that I'm not spending on reinvesting into my business? So there are many different tools. You know, Kim runs an equity fund. You can invest inside your corporation, and there are things called corporate class mutual funds. There's only a few companies that do them, where you defer tax. So think of your corporation as like a giant RRSP. You can't hold an RRSP corporately, where it grows inside, but when you take it out, you pay tax. Okay, so that's the big challenge that I think a lot of advisors and you guys are facing. And what Kim's talking about is one strategy where you can access money that's inside your corporation outside, and there are ways to minimize tax, but it has to be done in context, so let's put it that way. It has a state benefit. Using life insurance inside your corporation can have estate benefits as well. So you're kind of using life insurance as one tool, and there are many others to grow money inside your corporation. And I would encourage you, once you have retained earnings and you have your emergency fund inside your corporation as well, that you do start to invest, because you don't necessarily want the barbell approach where you take all your risk in your business and then you stick all your money into a savings account earning 5%, 100% taxable cash. You want to have something in the middle that also beats inflation and gets your corporate money working for you as well. And that could be an equity fund. It could be, you could have a portion of it in a life insurance policy, probably not all of it, depends on how versant and aggressive you are in certain strategies. Yeah, that's my thoughts.
Is this same strategy similar to the Smith maneuver, where you have a line of equity? Just so we have a better understanding in the real estate
What's the
world?
Smith maneuver?
I have a
question.
Very similar to that, where you have a HELOC and then you borrow against it and you use it towards a business from the tax savings. So kind of, it seems like there's a there.
That's a specific strategy. I would say all of these strategies really depend on your specific situation and goals. And so what I would just caution against is hearing about something someone else is doing or something you read on the internet and saying, I'm going to do that, because context really matters, especially when it comes to tax. So, and the other thing is, tax is always changing, right? There's nothing to say that the government couldn't change the tax rules in the future. So again, diversifying your strategies as well is really important. But yeah, some people, I see where you're going with the analogy, and I think the common thread is leverage, where you can leverage an asset to access money, because when you borrow, it's tax-free money. And so that's kind of at the core of some of these strategies. But they all come with risks, different risks, and it really depends on your context.
It's
so personal, right?
Yeah. I would say, I started my career, I did a lot of tax planning for people.
Oh, great.
The long and the short of it is that the goal of the tax system is that everything's perfectly integrated.
Yeah.
So you're playing around with the margins here, but
Yeah.
at the end of the day, $1 in your pocket, whether it comes from your business or a salary, they're going to try and get the exact same amount of tax on it.
Yeah.
So I wouldn't really lose sleep over it. It's how do you want it? Do you want to take your money quarterly? Would you like to have some deductions off of it so it's an expense in your business? You take it personally, the tax is paid. At the end of the day, when you're like in an earlier stage of your business, it makes no difference. When you are now making hundreds of thousands in excess a year, then it makes a difference. And so get to that place first and then worry about tax planning. There's benefits to taking salary because one big tax savings is you can actually have a TFSA account, which if you don't have it at this point, you have almost $90,000. And that is truly tax-free because you're using your after-tax dollars. So you have to have taken money out of something to be able to put it in a TFSA, and then it grows truly tax-free. You cannot have a TFSA inside of your business. So every year that you take out a salary, if you're not spending all that salary, then you can put it into something like that. But until you really have a legitimate amount of money in your corporation, whether you end up taking a dividend and paying tax corporately, or you take a salary and you don't pay any tax corporately, you're going to be in the same place at the end of the day.
What do you think about that, Alison?
What Kim said?
Yeah.
Oh, I
That's
absolutely, sorry, what Kelsey said and what Kim said. Absolutely agree. Life insurance is a kind of a unique tool that can, assuming the government doesn't change the rules on us, assuming you could work with an accountant to do it properly, it can allow you to access money tax-free outside of your corporation, but it is not a simplistic move. And it's probably a more advanced tax strategy, and I would say you can know about it and learn about it now to kind of know in the future. But to Kelsey's point, a lot of these strategies assume that you've maxed out your TFSA personally, you've had the big purchases personally, that you've got a problem of retained earnings inside your corporation that you want to maximize and access in retirement. The government, as Kelsey said, wants to get its full pound of flesh, and it's moving more and more towards this businesses should be taxed the same as individuals, even though you guys know you take a lot more risk. So yeah, it's you got to know about the tools, but whether all of them fit everyone, it's a personal discussion.
Well, and I think that's really important to say because it is so personal, and our strategy was chosen for our specific situation.
Yep.
And we got a lot of guidance on it, and we had a lot of education. My husband had a lot of education on it.
You have a lot of
I
education.
have had some
You have to
education.
start
I'm
owning that
learning.
space.
I am learning.
You
Yes.
do.
Yes, I'm sorry. I called that on that a few times. I am learning more about it. I'm feeling more comfortable about it, which is
Yeah.
good because probably a month ago I wouldn't have even ventured to try and explain what I'm doing because I was not confident in knowing what we were doing. But it's very, very personal. So again, I say this in real estate too. Don't compare your chapter 1 with my chapter 20. Okay, so I've been in real estate 18 years. I've been married 32 years. I've got a full family. We've got lots of, so my financial, the way we're handling our money is very different than what my sons are doing that, just got married and is in real estate for 3 years. So I want to really encourage everybody to know that your chapter is different from the person sitting beside you, and to make sure you call on people to help you with the stage that you're in. But I have been finding, especially talking with my boys and my husband, is we're finding the more and more we talk about what we're learning, the more and more we realize nobody knows this stuff.
Yeah. Yeah.
And I am shocked that people don't know this information and we didn't know it either.
It's powerful.
If I would have known this information 20 years ago,
Yeah.
I wouldn't be working today.
Yeah.
I would be doing this just because I love it, and I do love it, but I wouldn't have to work. So my goal, and you and I have talked about this, my goal is to make sure that I am teaching my sons, and we've done this their whole life, we've taught them finances because we knew that the school didn't teach about finances, that you can't even get a proper finance teachings probably if you went to university. Like it's just, there's things that you just don't get taught. And when it comes to strategies that most high net worth people use, it's not common knowledge. So it's interesting to learn about, there's another way that I could handle this and have my money working for me and see how compounding interest really works. And in order for us to teach and we're just literally just teaching our sons because we're not in the position to teach about this kind of stuff. I know that's what you guys do, and that's your goal, I just want to make sure that they have the information 20 years before I did to put them in a different position when they're in their 50s. So that's the whole reason that I just wanted to bring that up. I do not pretend to be the expert on that, and there's definitely experts to go ask about your own situation. But yeah, there's a lot of information out there that you can definitely find to help you make more money with the money that you earn.
Do you guys have any books or audiobooks? Because I know directors are in the car that you would recommend that helped you the most in terms of like the literature or education, or just learning financial basics even, or just to help out?
Come to my seminars. Honestly, I go through all of this stuff free. And you can listen to it if you can't join in, right? There's a challenge around financial education. One is, it's like drinking from a fire hose. Because when you publish something, you have to be so general, right? You have to be so general that anyone looking for specific information, it's like, well, that's not quite me, right? So I would say meet with an advisor if you want specific, like it can be free, right? And also a lot of, if you go to a bank, if you're lucky, they'll talk to you about investing, but it's very limited and the industry is quite siloed. So when you go to an advisory firm like Kelsey's, or you work with someone like me that's dual licensed, you get both the insurance and the investment leg, and those two things come at a problem with a different angle and sometimes competing, right? So you talk to an insurance person, they say, do this. You talk to an investment person, they say, do that. And you're like, well, I only have $1. So talk to someone either who's dual licensed or who has a team that will come at your challenge, opportunity, goal from different angles. And of course, a tax person is extremely important because all of these things are about minimizing tax. It's your biggest lifetime expense. So use the resources that are there that can be specific to you, and go and learn and read books and audiobooks. And there's podcasts. I bet Kim has some. She's holding up her phone right here.
Do you know this book?
Yeah, I have a bit of a problem with that book, but.
Do you? Okay, so, well, I'm going to say it anyway, so my husband absolutely loves this book.
I know, it sounds great. Yeah.
Well, but we're doing it.
Oh, I would love it if everyone, I love, that book is awesome. Be Your Own Banker, the Nash Method. It talks about leveraging a life insurance policy, a cash value life insurance policy, kind of like if you have equity in your home, you can borrow against that equity, right? That's great. And so with life insurance, you can build up a life insurance as an asset and borrow against it. That's kind of the premise. And in that book, they kind of show you how to do it, but they show policies that sometimes aren't available in Canada, that are extremely extreme, that most people, it has a lot of risks that they don't talk about. So that's something to just be aware of.
Yeah, 100%. But that is a book that Tony has found helped him understand
it'll blow
the
your
concept.
mind. Yeah, it'll blow your mind.
And it is a mind-blowing concept of what do you mean? And it says become your own banker is basically what the book
Or the
is.
Nash Method, you can Google it, but just caution, talk to a licensed professional.
100%, yeah, please.
Yeah.
So I would say my book recommendations, I would always read The Wealthy Barber. It's been around forever.
Yeah.
It's a classic.
Yeah, you can listen to that in your car. It's all storytelling, so it's very easy to listen to. And if anything is out of date, it doesn't really matter. It's not what the point of the story is.
His second edition is more relevant, isn't it? Doesn't he have a second edition now?
I think he has 100 editions, but my other one would be, and I can't remember the name of the book, but the author's called Morgan Housel, Housel, The Psychology of Money. Yeah, and it's really good to listen to because
Yeah.
I like to listen to things too. I read it, but that's a good one. And I think that those are, I think that those are two good reads.
I will say one thing, I don't totally on there, is that it's about conversations more than anything.
Yes.
You know, I think everybody, you have to be bold, be really bold with your questions. I think
Yeah.
a lot of people are afraid to talk about money on a regular basis. I know I came from an Asian household, we don't talk about it at the dinner table. So we, you know, it's very tough to, you have to go and meet a couple people here and say, hey, let's go for coffee and continually learn from each other and talk about it all the time. I know that that's where it changed for me, is when you're around people that are just talking about money on a regular basis, that it becomes very normal. And there's so many sources now. You can go on a Facebook group, you can go to a couple webinars, meet some other people, and then have that constant conscious communication with those people. And that's where your habits start changing. I think that's the big point of financial literacy, is just be a little bold, ask for some, not for help, but conversation, go for coffee, and just talk about money.
Well, and that's where that mindset has changed, right? Because when I was a kid, if I asked how much the mortgage is that my parents paid,
cut down.
It was none of my business.
Yeah.
It is none of your business. Where, you know, where we shifted that in our own family, when our kids were little, we actually, we did an exercise with them, which was a really fun exercise, where we went and got the amount of cash that we got for a month. We went to the bank and got it out in cash. And we sat the boys down. I can't remember how old the boys were, but and we basically showed them, okay, this is what we earn, and their eyes are like, wow, that's a lot of money. And then we said, oh, but hang on a second, the government takes this much. Oh, now we have this much money. Oh, great. Oh, but hang on a second, we got a mortgage payment. And then we essentially went down and did this exercise with the kids, where they actually saw, and literally, we ended up with $100.
Wow.
At the end.
Yeah.
Said, that's what we have left to do. You want to do soccer, you want to do football, you want to, like, so then it was like, oh. So it was really interesting to do that with the kids. I should have done that a couple more times.
That's a great idea. No, that's a great exercise.
And I don't even know if the boys remember doing that, but it was, because they just didn't just go to the bank and get more money out of the bank machine. What are you talking about?
You know, when you're a parent, you can screw up a lot of things. Like, you think about that all the time, and you think about, oh, like, I maybe said this one thing, and like, my child will be in therapy for like 12 years. Like, probably not, but you think like that. And I think it's the same, probably why we all get screwed up around money at some point, is because even just like you're in your day-to-day, and then your kid asks for something and you're like, money doesn't grow on trees, or whatever the expression is.
Oh, I heard that one.
Right? And then but they leave and they're like, okay, like, all I know now is money doesn't grow on trees, but I don't know anything else. Like, I don't know anything else about what this means. So yes, if you can, and it doesn't mean you have to have a perfect relationship with money, but there is something in your life you know about, right? Like, you know about something, whether it's like, okay, I need $400 a week on groceries or something like that, right? So that's a totally different mindset. Like, my mother-in-law was a single mom. She would know what a 4 liter of milk cost at every grocery store. Wow. I'm like, I go through the store and I'm like, this is gonna be this in my head, and then I'm like over or under by $40. I'm like, she would have been broke if she was over or under by $40. Right. So, you know, I think it's just take the small things, like what you did was such a great example, or if your kids get money at a birthday or something, every time, like, we have a little opportunity where we kind of pull back the blinders for them too, then hopefully they're not going to be, you know, as afraid to ask questions about things when they're older. Because money is one of those such easy ones, and you don't want your kids to stress about it, right? You don't want them to think they can't have something, or that you're worried, but it's a balance between saying, well, I spend this much on a mortgage, or, hey, you know, hockey costs this much a year, like, so, you know, that's like Mom's selling a house that's worth this much.
Yeah.
Oh, okay. Like, now I have a little bit more of an understanding of what goes into me having this opportunity.
My kid walks through my yard and says, that's too expensive.
But I like that you said bold questions as well, because you don't, like, to Kelsey's point, you don't have to know everything to ask a good question. One of the best questions Dave stumbled into when we were sitting down with our accountant was, but how do I not pay that tax? Right? That's a pretty basic question. That's what we're all thinking. How do I not pay that? And I think you said, but count, what was the exact words that you said?
I said, is there a way to
Oh, yeah.
expense current expenses against previous years of income? And you said yes.
Yeah, but it was a bigger, we'd had a big investment loss from one of Dave's developments. But anyway, that was a money mistake that we learned, right? Before I was an advisor. And we were trying to recoup some of that money. And he showed us a way, like he was like, oh, well, actually there is. You know, like, and it was a seemingly stupid question. Like, no one wants to pay tax. But the way he asked it, he was like, actually there is something you can do. And it saved us like literally hundreds of thousands of dollars.
Yeah, and then your story you tell about family and money.
Yeah.
Because we have a daughter. Tell about the story about Hannah and her horse or her dog walking money.
Oh, okay. I don't know if that's, I don't want to hijack.
No, go
okay.
for it.
So if you have kids and you're teaching them about money, first of all, yeah, having conversations is number one. Well, I was trying, now I was an advisor and I was like, okay, I'm gonna make the perfect kid money-wise, right? Like, you know, right? Doesn't happen. So yeah, we screwed up. Yeah, so we all do it, right? We all have our biases. So we were trying, okay, how can we teach her to start saving? Okay, we'll try the jar method, right? You guys heard the jar method. You know, you earn $1 and this much goes into spend, this much into save, and this much into give. Well, she didn't really like giving, right? Like she was, I don't know, 5. So we're trying to teach her that ethic, and she kept rating the jars from one to another. Oh, that's actually what adults do too. We rate our jars, right? If we want this, okay, forget that, I'm gonna spend it. So what we ended up doing that worked for her was, you know, she got a bit of money when she was 13, and we said, okay, $1,000 in your bank account, that's 0. Because that's her emergency fund, right? 1,000 is 0. And then you're earning, she's dog walking, so she was earning at the time $50 a month, or a bit more, dog walking. She was earning more than that, I guess. So $50 a month was invested. And then everything in between 1,000 and what she's invested, which was automated, and that's the key, is automating your savings, investings, she can spend. And like, you can spend it, you can give it, you can do whatever you want with it. You're responsible, and we'd have discussions around that. And then she's like, oh, I don't want to spend it. Whereas if I had told her, like, don't spend it, of course, I want to spend it, right? So emotions, money and emotions are interlinked, but now she's been able to increase her investments to like $150 a month, and she's just dog walking. And she's budgeting it out. She's like, oh, I want to get she's 16, I want to get my eyebrows waxed, but, you know, I can't do it till the first of the month because my budget is, you know, I'm at the end of my budget, right? It's $15, and I'd be like, oh, okay. But she's doing it, right? So giving yourself a bit of latitude, and also giving your kids, when they're ready, the ability to make some decisions for themselves can be, you'd be surprised what they will step up to. Yeah, similar, yeah, but you're smiling.
Good story.
Yeah.
Yeah. No, it's great.
But the jars didn't work for us.
Yeah. Well, I do often wonder how all these 16-year-olds have like nails and eyebrows and eyelashes. So now we know it's the dog walking business.
A lot of wealthy millennials with dogs.
We have to do that.
Yeah.
How important is to have a right accountant?
Very,
A right accountant.
very.
So how do you find it? Like, how can you?
Well, I like creative accountants, but legal. So there's 2 kinds of accountant, and Kelsey is going to be probably way more. I might be the on-the-ground person, but Kelsey's very knowledgeable about taxes and accountant. But I would say they have to fit your personality. You have to get along with them. David and my accountant don't get along, so I do all the discussions, right? Right? When you say that's honest. But so they have a good personality. They have to be willing to think outside the box. Like an accountant looks at like a standard file your personal business taxes. They look at kind of a lot of them, not all of them. We'll look at this year and previous years. And if you can find an accountant that's willing to engage with your advisor, willing to engage with you and think a little bit about tax strategy, I think that's an accountant worth keeping, because some of them seem to have that skill, comfort level, and some not so much. Some kind of pump it through, like they're just filling in the boxes, and some are really like, let's look forward.
Strategic.
Strategic, yeah.
That doesn't like CRA.
That's also a good trait. I think a lot of accountants don't like CRA, but some more so than others. So,
I think it's important to remember with accountants that they're only good at looking backwards.
some, not all.
They're not always good at looking forward.
Yeah, some, not all. And I think advisors look forward, but an accountant and advisor will have a different lens. And if you can get them talking, or they're at a firm where they have both tax and investing capabilities, you're going to get that more holistic approach.
Yeah, I mean, like, I think an accountant is obviously, in your business, you do want to have a good tax strategy, so you sort of want to know what their background is. So, like, I have a chartered accountant because I got it a long time ago. Everybody's a CPA now. But after that, you can get specialties. So, have they done the 2-year tax specialization? Well, then they have a deeper tax knowledge than the average accountant. That's a pretty simple question you can ask them. And if it's very important to you, find one who has that. I think you also have to remember, like, an accountant is a business. They're only going to spend time with you to the extent that they're going to make money on you. So if you send them records that are complete mess bullshit, they're going to spend all their time doing your accounting, and they're going to be like, I'm not making any money on this guy. I don't have time to look at this file any deeper. But if you have a real record, then you send them in a P&L at the end of the year, your profit and loss, and they can take that right away and ingest it, do your tax return, and then start looking at planning. You're in a better position because you've taken, like, the least valuable work and done it yourself. And now they're doing the high value work, which is telling you where you can optimize your business. So I think you need to interview a few people, see who you feel comfortable with. Just like everybody said here, talk to other people that you know and trust. Who are you working with? Have they provided value? And then go in and say, like, this is what I'm looking for. What do you need from me to be able to do this? And then if you know your records are a mess financially, then your first thing is, I actually don't need an accountant right now. I need a better bookkeeper because I'm not very good at bookkeeping. And so that at the end of the month, I have my expenses recorded properly, and I'm not like, oh crap, do I have those 7 receipts from Earl's for all those meetings I had so I can put them in to show them that I have the backup? So it's first principles. Get your house in order and then go find a person to give you advice.
Yeah. And I think what happened for us was when we started working with our financial advisor, I didn't know what questions, I didn't know what I didn't know. So I didn't know what questions to ask. So I basically said to him, I said, can you help us make sure that we're set up? So he actually seeked out and interviewed and advised us on what accountant to go with. So I actually deal with an accountant in Vernon because we live in Coldstream, but my lawyer that has to deal with, because we have a unique situation of what we're doing, my lawyer's in Kelowna. So and with my situation, I have to have lawyers, and my lawyer and my accountant have to be able to talk and know what each other is talking and why it is happening the way it's happening because of the complex thing that we're doing. So I relied on again, back to my point, I relied on the experts around me because I'm like, I don't know what I don't know, guys. I need you to tell me, what do I need to be looking at? What questions do I need to be asking in order to make sure that I have the right people around me, making sure I'm doing this right?
Yeah, and I would say one more thing, sorry. If you can, and you're gonna do something that's different than you normally do, and you have enough of a relationship with your accountant, call them before you finally ink the deal. Because sometimes there's a better tax strategy than what you're thinking. So say, for example, you're gonna do a real estate deal within your prec, and you've never done this before, you're actually gonna invest alongside one of your clients or something. Just like,
Don't do that.
Take 1 minute, well,
not allowed.
I don't know. Sorry.
Hypothetically,
you're gonna do something as an investment, and you've never done an investment in your company before. If you have enough of a relationship with that accountant, call them ahead of time and just say, hey, I'm thinking about making this purchase, doing this whatever, hiring this person. Should I be doing that this way? Because if it's that whole, like, ounce of prevention is worth a pound of whatever medicine, I guess. It's the same thing with your tax plan. So they can do some things backwards looking, but if they have that awareness of what you're about to do, they might be more helpful.
Exactly. Yeah.
Is there like an app or something that you could recommend to somebody that also bookkeeping?
An app?
I know.
I have QuickBooks Online for my husband's business. Yeah, I hate it. I hate it.
So I am a horrible.
But it apparently works well.
Yeah, so my husband says, where are your receipts? And I'm like,
Like I just tap shit.
Right, yeah. So what I've started doing, I use Genius Scan in regards to an app, which is just, it's literally just a scanner, but I use it for scanning over contracts and all that kind of stuff, so you don't need a scanner anymore, you can use your phone. But I use it, I scan all my receipts. So I'm down here for work, and I start a file, and it's Vancouver, Oakwyn trip, and every time I have a receipt, I'm scanning it, it's going into this file, and that will get emailed to my husband, who's my bookkeeper, because he's doing that in order to hand over the accountant. That's the system that I've created that works for me. It is taking me a long time to get habitual with it. I'm trying. But yeah, that's the only thing that's kind of worked for me. I think it has to do with your personality, because there's going to be some things that, you know, you're so organized with your receipts, it's all in your wallet, and, you know, I could say, hey, just go there every time, and then he's got to go looking at my car for them.
Right.
I think maybe you had a
suggestion. Another idea is, and what I use, because I have a bookkeeper, like essential, like I save a lot of money using the bookkeeper, and then she passes it over to the accountant. But I asked her, what should I use so I can do some of it too, and she uses Wave accounting or Wave apps. Waves app. And it's a free accounting software. It helps to have the bookkeeper help you set it up, and you make the categories. So I have all my categories aligned with the tax categories, work from home, you know, vehicle, and then it just sucks in, if you're comfortable with this, it sucks in all of your expenses that are electronic, right? Your credit card, your debit. You link it to your bank accounts.
Yeah, exactly.
Not
You can put on the app.
Yeah, just like
that too. Yeah. But that's too much work for me. Like, I don't want to scan a receipt.
No, just take it.
No, I'm too lazy. I'll categorize the expense, like, and then it just has the categories. You tick, tick, tick. It's so easy. So if you're really lazy like me, then maybe.
My bookkeeper tells me to send a receipt for anything over $500, and that's about it.
Because usually they
I expense
rate
every
it.
penny, but yeah. I expense everything. I just don't take pictures of it. Yeah. So that's me. But everything's electronic now. So there's lots of Waves apps or Waves app accounting.
perfect.
But QuickBooks lets you track your mileage, which is beneficial.
Yes. In Canada, it's hard to find an app that does that. I don't even bother with my car anymore. I'm too lazy.
Yeah.
That's good. That's huge for realtors, I think.
So since we're talking about expenses, I do have an example of the business budget spreadsheet that I use. This is what, so Richard Robbins created this for all of us members. So I have, I'm giving all of you guys this spreadsheet. So it literally is where you can put in your actuals and your goal for the next year. These are all fake numbers. So, you know, I do not have a 53% profit margin at the very bottom. But this allows you to at least know, and you can alter, this is going to be an Excel spreadsheet, so you can alter it for what you need. But it should cover most of the expenses that you need. You can see the support staff in there. You can add your own if you want your own. You don't want yours in the support staff. You want yours just as income. You can add your own line in there and all that kind of stuff. So this will give you a good idea of what your expenses are, what your income is, where your money is going. Because if you don't know where your money is going, you don't know how to change where you're going with your money. And this will be workable. You guys can download this and use this, and this just helps with business.
Great.
Any other questions?
Questions? All right, well, I think that was a fantastic WOOShop. So
Thank you, Kim.
Thank you. They're going to stick around, I think, for a couple minutes and just mix and mingle. Some fantastic questions here. Just an introduction for all of us to really get bold about our financial literacy. Just a reminder, this is in the spirit of Woo, and this is the conclusion of our WOOShop series. We are partnering with Women's Health Foundation this year, so there is a barcode over there. We are, looking for donations to support the cause that we have coming up next month.
Even if it's $5.
Yeah, even if it's $5. And we're going to be having our Woo event coming up in October, so look out for that. But thank you all for coming today. Thank you all for so much information and knowledge and just the sharing.
And no one fell asleep.
Yeah.
Coffee. Yeah, great. Thank you so much.
Thank you.
Thank you.